Good evening, everyone. This video is going to be a trading review and support session for May the 17th, 2023. And I kind of shot myself in the foot a couple of times today. And we're going to spend some time talking about that. And as much as I talk about that and how not to do it, then maybe I'll eliminate some of these days. It wasn't a horrible day. Could have been prevented easily, but those are the things that we need to continually learn on as we go through this. So let's just kind of go through what we normally do, and I'll go through the news first that we had this morning. We had a little bit of news at 5:30. Get on the right day. Today is Wednesday the 17th. 5:30 we had building permits and housing starts, and the market interpreted it pretty positively, and so that was some of my beliefs, pre-opening market beliefs, is that the market was interpreting some of this data kind of positively. And we got some more of the positive news later on in the day. But let's kind of do that. So as you can see, right, and we're already into R1. Let's get into the big picture chart so we can see where we were when the market was opening at 6:30 kind of time frame. So here's the market open, right? So we're already above the close. We're already above the pivot. You can see that the London session was turning out positive, especially since the 5:30 news announcement, and we were running into R1, and definitely above the 25% upper line, and I was kind of expecting a return to that bullishness, and it did. It just happened much later. So let's kind of go see what we're looking at. So here we were. We had just made a new Globex high, right? So market opens here, and certainly wasn't chasing anything at that particular point, right? So it's kind of waiting. It didn't. It tried to hold at the EMA, but Ultraflex was still very we're under Ultraflex, and kind of bouncing there, but I decided to wait a little bit more because I didn't like it. It pulled back down to the minute average, right? And the minute average looked like it kind of held, and we're kind of bouncing here a little bit. Pretty good bar here, no volume, right? And even though we were above the EMA somewhat, of course it adjusted here, but even here we were above the EMA and above Ultraflex, but pretty much this was where I kind of shot myself in the foot. This was, of course, not good alignment, right? It was not good alignment, and so really it was just kind of a believing that the support model was going to work, and it's so trying to support the minute average, trying to support, but the support model will not overcome unless it takes some time, right? It will not overcome a flex alignment that is this bad, right? So if I had gotten out of this trade, I would have been lucky instead of interpreting the market correctly. So that was entry number one, right? And it came down further. I've only got one unit so far, right? So here's the next opportunity for it to hold. Here's the 2x20, right? So it may be appearing that the 2x20 wants to hold, and it's coming back up. So here's entry number two, right? So I'm adding a little bit of insult to injury. Ultimately, my average is going to be in here somewhere, and it's trying to hold on. It just needed to break this 3-minute high. Not that this was a good trade, because I'm going to tell you it's not a good trade. It's kind of going against the indicators that we all like and worked so hard to create, and it just wouldn't quite break it. So this 3-minute high is not holding, and so ultimately it fails, right? So the good part about this is I didn't hold it forever, and I recognize it. And ultimately, let me move this over just so we can see a little bit more. So ultimately, I reversed here, right? I had 2, right? And looks like I added a 3. This is number 3, I believe, unit number 3. And so I want to get out at least something, right, prior to the 25% upper line, and I do that. So I'm out 1, and then it bounces off the 5-minute moving average, right? So here's that support model, which ultimately didn't hold, right? It just came back up to the EMA, and then, but I'm looking at it. I said, well, I better be a little bit conservative. So I ended up getting out another one, I think probably at the same level. So now I was holding 3, now I'm out 2, and I did separate the other one, so spread it out some, and got out of the trade totally by then, right? So and ultimately, in this quagmire, ended up making some money. But I mean, this is really not what we want to do, right? So we want to make sure that we're coming into the market open in any time, right? We're coming into it without bias, and we're going to follow the indicators and do it. Now, was there ever a great entry? Well, we could say that maybe in here it was an okay short entry, right? And that would have worked. Right, we don't. I mean, because the bars are magenta, meaning that the flexes are in alignment. Right, it would have been needing to break the minute average, but it did ultimately, right, because it's in fairly good alignment here. So where's the next opportunity? The next opportunity to go short was over here, where I decided to reverse, right? And so that could have been. I ended up out of this trade, the first trade up 2 points, but with commissions. I could have been up 2 points with just normal, 2-unit commissions. So it's a little bit lighter on the profitability that I could have been, and ultimately I ended up, going a little bit aggressive again, right? So I entered in another short trade. At least I'm kind of going with the trend here now, right? But it's around VWAP, and VWAP wasn't all the way into the EMA band just yet. But it's kind of hanging out, and these areas are a little bit dangerous, like I said before, right? Because a lot of times they go under a few ticks under a floor pivot, and they don't push down any further. Even though we had some the AVR continue to be negative. This is not a horrible trade. It's a little bit aggressive because it's at VWAP, but it comes back up to the EMA, right? So it's responding okay at the EMA, and it's kind of back under slow flex is still coming down. It's back under ultra flex. I care about those two more than I care about fast flex. Just like slow flex is this longer term thing, kind of like the EMA and the minute average, and sometimes the market is just a little bit out of kilter with the fast flex. So I'm okay with this entry, and I'm out 1 here, right? I'm out 1 here, and I'm out the second one down here. So that was a positive trade. So don't have any great concerns about that decision to go short there. And so we get another. We'll talk about this one. I talked a little bit about this in the session today. So obviously the trend is still down, right? The trend is still down, and we get this flush downward, right? And it is kind of coffee break time, but this big bar flush down. And and these things are fast. There's no really way to catch this in between unless you have we kind of talked about this last time, like a stop market, entered in about there. But I'm not particularly interested in doing that just yet. What I am looking at, right, is if this is a flush, it's a little bit more continuation down to the 2x200 here, and I'm watching it, right? If it's not going to bounce, if it's not going to bounce, then it has more of a chance of continuing downwards a little bit further push. And so I'm watching it, one tick up bar, one tick up bar, then a down bar. So this is when I decided to go ahead and take another short position. I mean, the trend down is even more so now, right? The EMA is stepping down more, and so I'm out here, right? So another positive trade, and so that's that one. All right. So this next one is I do get out, and I get a profit, but anyway, it's a little bit more dangerous. So here it is. I tested. Well, anyway, it's not a great decision, right? We did get another push down, and it is kind of and the trend is still down, and we get another kind of a big bar. I didn't really wait that time, but I got it was successful anyway. This is a pretty aggressive trade. It was this trade was a rejection of the pivot point in the direction of the trend, right? The bad part about it is it was kind of against the Ultraflex for a while, and that's not the best scenario. So you are playing a little bit on this rejection model, and but that one was okay. That was okay. Now, so that one did not get me into trouble. It's this next one that got me into trouble. So at this point, I think I'm up 4 points at this point, right? So I think that was the peak of where I was at any one given point in time. So waiting to 7 o'clock. I said I was going to wait to 7 o'clock, and I did, and I almost regret it a little bit. So this would not be a bad. And there really wasn't any news today at 7 o'clock, so it's not like the market was going to get extremely volatile, right? And we've got selling going on, right? We're underneath the EMA. EMA is still coming down. Slow flex is still coming down. Now we're not under slow flex, but this is a pretty good slant. But I passed. I'm going to wait until after 7 o'clock, and I did. And it looks like it wants to push down, right? But that's the 3-minute low, so I take this trade, and it's a little bit dangerous to take a trade, which is actually why I have markers for 7 and 7:03, because sometimes this time frame is they try to fake us out a little bit, right? And they fake me out some. It is with the trend, right? It's just in that time frame that they can make a decision that they did. And so I added to my problem, right? And this is a problem for me, so try not to make it a problem for you. And that is, I added to it fairly early, right? So here's one. Here's the first unit, right? I get okay rejection here, right? It got up near the EMA. I get okay rejection, right? But it's into the 3-minute close, and it's against one of our best friends, which is Ultraflex, especially for an ad, right? If you want to take a chance on that as an entry for the first entry, then that's not horrible. Let's see, I don't think I would have gotten out. Let's just say I got in at that level, 751. It would have needed 651, and it missed it by a tick. That is, I don't know exactly what level that I got in at. If I got it at the bottom of here, let me go back and see what that was. Yeah, I mean that would have been level. So I would have, if even if this was my first entry, I would have missed it by a tick. But at least I would have only been carrying one, and I would have had a better position, right? And so I have two. Let me move it over so we can see kind of what's going on here. And then so then 703, and now I am. This is a bad habit of mine, right? And something I have to work on a little bit. So I'm trying to add two to get out, add to the trade to get out earlier. And what I have a tendency to do is I watch the bar movement, right? Anticipating a further rejection of what's going on. Well, if it's not helping me any, right? I mean, and we just had some volume coming from yesterday's close, right? So since we had some volume going the other direction, then this is premature. Same thing here, right? We had some volume, had some more volume. We're above the EMA with an expansion, right? So this may not be the best initial long entry since it's kind of crossing and going into the minute average, but we do get a little bit of rejection here, right? But again, right into the 3-minute moving average. I need it to come down more, and of course it doesn't, right? So as I discussed earlier, I did reverse, but too late, right? Especially since I had 4 units. So this would have been a better time to give up. So I'm looking at the pivot point here and say, well, okay, maybe the pivot point is going to save me. And I think that is the wrong thinking, right? Because if this is a good first entry, it probably is a pretty reasonable point to reverse. So I didn't reverse until basically here, right? A little bit before the daily bias. And so I'm 4 units into it, and now I'm dug myself something of a hole, not huge, but something of a hole. So now I'm long, and I think I'm long 1, 2. Yeah, I think I'm long 4. All right, so let's move over a little bit to discuss. So now I'm long, and now we stopped at the 2x20 and the 2 and the 2x200, and so now I'm long from about this level. And now I'm kind of waiting. The market's not fast, but we're hanging in there above the minute average. We're hanging in there above the EMA predominantly, but it's a low volume day, and I hate low volume days. But so I originally had these things spread out, and if I had left them spread out, then it would have been pretty good. But I decided, what, I better get out of one before the 2x200 again. So I did. I got out of 1. So now I have 3. And so now more time is going on. It's still, it's just kind of oscillating, but we did make a new high from this pivot. We did make a new high. So I'm hanging in there and not loving this low volume day. And like I said, originally I had my last exit way up here, and here, and here, right? I had 4. So now I'm getting a little bit, well, I'm not comfortable with this thing going all the way through, right? So I bring one down, and even to a lower level than I got out before. So I got out of 2, I got out of 3, and I'm out, right? Had I been able to stand it, I mean, I'm not, the account's not in bad position or anything like that. I'm just tired of being in the slow market trade. Had I hung in there, right, a little bit longer, right, as you can see, I would have gotten out of the whole thing, and probably would have been in fairly good shape. Well, okay, so I was up 4, and now I'm down 10, so a 14-point difference. So, but there to there is 2, right? And 2 times, the 3 units is 6 points, right? Difference. And if I had it reversed a couple points earlier. That's 8, right? No, 8 times 4. So really, I could have been out had I been able to kind of hang along, manage this trade a little bit better than actually would have been profitable. Now, do I have regrets about where I got out? Not necessarily, because it was a slow market and I wasn't necessarily feeling that comfortable. What, of course, I have most regrets about is adding, right? This was an aggressive. I mean, it was with the trend. This was a little bit aggressive trade in a not great time frame. What I have most regrets on is adding, right? When it's against Ultraflex, and it's even above Fast Flex, and it's above Slow Flex, and I even added one after Slow Flex had turned. That's pretty aggressive. So I have to watch that, and so just because I'm aggressive doesn't mean you guys are aggressive, and some of you guys are more patient than I am, which is good. Like I said, I applaud that. All right, so now I'm down 10, and I'm not too terribly happy. Let's see, let me get back. So I decided to take a short break. I wasn't really going to try to get all of it back today, right? I was kind of beating myself up a little bit. But I did come back and I traded some more, and I kind of mentioned those things after I had traded them some, because I didn't know if I was going to be in a good frame of mind or not. So here's the first one I took, right? And I'm out here. Even that, it took a little time, right? So then this was a pretty good trade. I was a little bit late, right? I'm long here and out there, but it had a pretty good run going up, so I recovered 2. Let's see, I've got 2 more trades that I've done. I'm trying to make sure I don't. Oh, okay, here's another. Here's one. I'm missing a trade. So this is a pretty good looking trade here, right? It's breaking out. So there's that one. So I missed one other one that I took. Let me see if I could. Got that one. Got that one. Got that one. 1, 2, 3. Which is that one. Was it later in the day? Well, I don't know. I only marked 3, but I know I did 4, so I missed one somewhere. So then I didn't try to trade any more after this one. So yes, I made a recovery. I finished down 6 gross instead of well, I was up 4, went down -10, finished up -6. -6 today, -5 yesterday. And I hate losing money. I hate losing money, period. I hate losing money on back-to-back days even more. Maybe this is the one, because here's an out. Oh, okay, so here's the 4th one, right? I guess this should be over here. All right, so this was the last trade of the day. So it did mark it, I just didn't count it. So there's my -6 for the day trade. So I hate slow markets, but really, and we really should do this, and I say this and sometimes I just can't get it into my head somewhere, is to be the most conservative. Wait until the indicators are nicely lined up, right? As indicated by the paint bar and volume, and those things go pretty nicely. So I need to slow my trading down, be more patient, take the best entries, and a good point was made in the session today, and I repeated it. And if that means we only get 2 or 3 points, then so be it. I mean, I always seem to get 4 or 5-ish relatively early, and then maybe I'm rushing too much to try to get the next one or the next couple. So I need to be cognizant of that and try to be careful. You guys certainly need to be careful in your trading as well. So no great harm done. I just got to get back into um, the most conservative mode that I can get myself into, and to talk my finger into being as well, and kind of stand back and take a look at this. I have done one thing for visibility purposes, and I let me show you. It's no super big deal, but on mine, especially since I am, nope, that's not it. I think it's control, yeah. On mine, I increased the bar space by one level. So that's what mine is going to look like. Now I've got mine stretched out over two monitors, but maybe I can see just a little bit better. I'm thinking that I can. So because really we should be really focused on the flexes and the EMA area, and increasing visibility in that area, I think is probably a good thing. So I'm going to try that tomorrow. I don't think it certainly wouldn't do any harm. And since I'm stretched over two monitors, I'll still get lots of visibility backwards. I only lose. I tested it. I was actually surprised. I only lose about stretch across two monitors. I only lose about 4 minutes of history if I do that. So let's see how much I do here. So we're going 27 to 41. So I've got about 11 minutes of history, and if I decrease the bar spacing, then I've got 14 or 15, right? So it makes a little bit more difference on just one chart than it does two. I mean, one monitor versus two. So I'm going to leave it that way for tomorrow, and I'll talk about it in the room a little bit tomorrow morning on what I've done, and to see what that is going to be. All right. So anyway, patience, 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 and knock the aggressive chip off of my shoulder, and be a little bit more consistent. All right. Any questions? You might be typing. Yeah, 3 days in a row would be pretty bad. I don't plan on going 3 days in a row. That's for sure. All right, have a good evening, and join us if you can in the morning. And if not, we'll see you. We'll talk to you soon. All right, have a good evening.